Long-term interest rates in Japan are soaring, and many are concerned about the carry trade to actually unwind and create a lot of trouble in worldwide liquidity, bringing markets down. But why hasn't that already happened? So let's discuss about that today. So first, we need to see the JGBs, so the bonds in Japan. So this is the 30-year yield, and you see how steadily a month after month you get this rise, and it's absolutely it's at its all-time high. So if you follow Japan's economy, this would be a huge anomaly, as if bonds in the US would be around 10% or 12%. So, and it catches people's eyes, like why. So that should eventually create a problem in carry trades where you get credit in yen and a weaker currency to take advantage of the S&P 500 or any other markets that are dollar denominated. So that's the idea, to create that arbitrage, and even more. You also take advantage of leverage. So when you have a funding cost that in Japan that gets higher and higher, then it's not really a great deal to have a carry trade in the first place. That's where the unwind happens, and then you would have capital going back from the United States to Japan. And this also shows how the yen actually gets stronger when that happens. And we've seen that last year by July, but never again. And why do we have such high interest rates in Japan right now, and we don't see that reflected in the S&P 500? So basically, so this is more complicated than we think, for sure, because if you just see this chart, you're probably gonna think that we have something that is imminent, but just having that impression that something is actually going to happen, the timing is way more important. So let's discuss the counter forces that actually act on it. And we discussed on our BI report how about the Fed and rate cuts. So we do see at least the intention of an easing and what comes to the Fed, but we see fiscal liquidity just being drained to the market. So the US is spending more and more, and this is creating a lot of abundance of liquidity worldwide. So this is one of the forces that actually is creating an all-time highs in many other markets. So you see even Chinese stocks going up. You see Japanese stocks going up. You see EMs, Brazil stocks going up. So everywhere is kind of going up at the same time. So this abundance of liquidity, and especially when it also goes to the US, because we have way more flows coming into the United States as we speak, as we show on this report as well. This comes from Robin Brooks. He shared this chart here that shows exactly how we see more and more influx of money and capital coming to the United States in equities, corporate debt, treasuries, especially treasuries. So we see that movement coming in. So this kind of offsets whatever you see happening in Japan. But also, it's also important to understand that if we go back to the 30-year yield, this is not as if everybody was caught by surprise. So this movement is gradual. We also see how the Central Bank of Japan, the BOJ, the Bank of Japan actually, they are already announcing for a long time that they want to normalize the Japanese economy. So they want to bring back interest rates a little up to end the the experiment with zero or negative interest rates as they have done. And they were on a hiking spree, totally on the opposite way that everybody else is doing around the world. Everybody's cutting rates, and maybe the Fed will cut rates also in September, showing that they are more dovish. And Japan was the other way around. They were more hawkish. However, they paused. And then this creates kind of a narrative that, look, things are coming back to normal. So there is a whole normalization theme going on in Japan, and entities are just trying to see to look for yields at home. So without the need of funding necessarily from one way of doing business, those entities, they are already finding other ways to actually get funded where those interest rates don't affect them that much, even abroad, so that you're able to still do a carry trade, but not necessarily in that way. So you see an adaptation going on. It's not that everybody is just all of a sudden, we don't have like a sudden spike and everybody and the whole market crashes at once, but you see kind of an organic market being created and adapting. So it's when you don't have a specific carry trade that works, you're gonna switch to something else that will. But not only that, you see also a behavior of the BOJ that is still on a pause, but the market is not too sure what they're going to do. What are they doing next? Are they going to hike more? Are they going to just keep hiking, or are they going to pivot? So the market is kind of on a wait and see, and it makes no sense for an investor if you're still waiting for the BOJ to decide what actually they want to do next. To hold a very long-term bond. So some of them are switching to short-term bonds, so to really the short end of the curve, which is still pretty low, still allows them to work on a carry trade, still provides them for a way to be business as usual. So you see that adaptation going on, and in macro, so monetary mechanics, it's all about like a pool of liquidity. You have counter currents that are able to compensate or even completely eliminate a specific trend. And if we see what happens with the whole liquidity that is actually abundant, things change. If for sure, if we have a drain of liquidity somehow, then everybody is on the table. But if we see what is currently happening to the DXY, which is the dollar, it's just still on a trend downward. So we are still bearish on the dollar. Of course, maybe since July, we did have a little bit of reversal. We discussed about that on our BI report as well. But this allows for relief in Japan for people not to be panicked, because unless this regime changes, that is not really that only a Japan carry trade can do to break the whole economy. This does not mean that everything is going perfectly fine and there is no problems with the system, but you see how those forces act between each other. And by the way, if you like this kind of information, and if you want to dive deeper into macroeconomics and also what it means towards Bitcoin, we do provide on-chain analysis, macroeconomics, and also monetary mechanics. And you can see that on the link on the description below. And something new for the readers, you are able to read it for free. So you can have a free trial for 2 weeks. So you have the full content, and you can just click on the link on the description below for an yearly subscription. All right. So this is why it's very important for us not to get too caught by those kinds of narratives. So, and what happens to a shift, because with this, so most people by now, they know what a carry trade is. They know about the risks. Can you imagine somebody who is actually managing over $1 billion, $10 billion, $100 billion into carry trade? So this is a way for the whole system to adapt. But for sure, these are interesting times because we're never really dealt with the Japanese economy being hawkish and also producing some inflation based on wage, on a wage inflation based on negotiation. So this may provide some more hawkishness, but maybe those days are over. So we have to wait and see what the BOJ does from now. All right. I hope it was helpful, and see you in the next video.